Have you ever sat here and just blinked your eyes because you just are trying to understand, like, what the heck is going on in Northeast Florida with the housing supply and demand, the increasing rates? Like, what's happening? Well, I'm Gigi, your homegirl with the Gigi Your Homegirl group and Picket Home Advisors. Today, we're going to take a deep dive into what the heck is really going on with all the things, including rates. And are we really headed into a crisis or just normalizing? Well, as we all know, we're dealing with a couple components. We came out of a pandemic, we came out of a housing crazy like Black Friday special where people were basically like not doing appraisals, skipping over and offering above and beyond asking price, giving away their car and their firstborn just to even get their offer accepted. We've shifted from that. We've also shifted from the craziness of the lockdowns associated with the pandemic. And now, as the dust is settling, we're trying to normalize the market, but we're also recovering from all the mayhem that led us up to this. And so that is why research is telling me that people are just trying to figure out what normal is. And so here's what normal is not: no homes on the market for sale, tons of buyers coming in with cash, willing to pay above and beyond premium for the home, and interest rates below 2%. That was like market crisis. If we want to talk about crisis, we were locked down in our homes. People were having virtual Zoom happy hours. Extroverts like me were going crazy with not being able to be around people and do people things. And so, yeah, what did we expect to happen when we came out of a crisis and begin to start to normalize? It's like letting your teenager do whatever they want for 2 years, and then all of a sudden we have rules and curfews, and they're just like, "But why?" That's the GG real version of what's going on with the market. It's like a teenager that has been locked up for so long on restriction. We've let them loose, they got in trouble again, and now they're like, "Okay, what do I do?" And so that's really in real people terms. We could get real technical and savvy and fancy with verbiage, but what do you really want to know? Are 8% rates around the corner? The trends are saying yes. Here's the thing though: inventory, while a few more homes came on the market, we're still seeing many homes sitting on the market for a number of reasons. Sometimes they just need to catch up on, newsflash, there's a new pricing strategy for this new market, Q4 of 2023. The pricing isn't the same as it was 6 months ago or even a year ago. So we need to realign those prices with the market. The second reason is buyers are in a sense of uncertainty of what's going to happen in the market because, the rates have been up, down like a slingshot. What we're seeing is we knew that they were trending up, and now they're kind of at this little standstill for a minute because the Federal Reserve, put a kind of a hold on the overnight rate. And so we're battling an inventory supply and demand crisis, but we're also in a perceived mortgage rate crisis because the rates aren't 2% anymore. So we have less people out there going, "All right, well, let me upgrade, or maybe I will downsize." They're looking at these rates and wondering, "Well, how high is it really going to get?" And here's the thing. Yeah, we could say date the rate, marry the house. I'm sure you're sick of hearing that. But there are some really good programs available when you partner with a local mortgage broker that may provide some down payment assistance or some options to either temporarily or permanently buy down your rate. I mean, here's the cool thing: if you've been in your home longer than, let's say, 5, 10 years, with home appreciation rates almost triple what the standard is year over year, Many of us probably have enough equity available if we were to sell our home and take some of that equity to buy down the mortgage that we're going into on the new home. That immediately can help you lower those rates. So I'm not denying that we have a rate rise crisis, but it's kind of like gardening. If your plants aren't doing well where they are, it's time to talk with a professional and think about, okay, what do they need? Does it need more water? Does it need fertilizer? Does it need to be moved to a different location? And so we do that in order to make sure we cultivate good crops. The same is true for real estate. I mean, people are always going to be buying and selling real estate. It's been that way since forever. What we have to do now is figure out, how do we work around the current state that we're in? And that's what I'm here to talk to you about today. So, why are we in this situation? We've talked about the pandemic. We've talked about rates hiking. People are feeling the impact of a little bit of that uncertainty. And honestly, inflation is what's hitting us right now. It's what was created when the lockdown began. We didn't feel all the inflation. We felt a lot of stimulus. But now we have inflation. It's like we borrowed and borrowed and now we're paying back. And so while we've seen a slight decline since last summer with rates and then they accelerated back up, now it's because we're seeing the true impacts of higher energy cost, export import, the cost of government spending, higher costs due to higher rates, labor strikes, um, employers and entrepreneurs that are trying to find their way with less staff and higher costs to do business, not only in supply, but cost of employees. So, what does this all mean to real estate? Well, it means good news. Although, right now, it might be a little spooky. I mean, we are going into spooky season, so why not be a little spooky with real estate? So, the good news with inflation and battling coming out of the pandemic and starting to normalize in the market, this is not the same as the crash that everyone remembers from 2008. Why? Because homeowners have more equity today than they ever did, despite the fact that we have rates flirting with 8%. We, back in 2008 and before, had rates that were as high as 16 to 20%, with home appreciation as low as 3%. We're in an inverse situation now. We have more equity and the rates are still lower historically than what they've been in past. So there's also still very affordable payment options with locked in low rates. You can use your equity to buy down the loan to pay cash for the property. Um, and in some cases, we're seeing sellers being more willing to offer some support towards closing cost and expenses associated with, and offering some incentives. And we're seeing builders come back with incentives available. Home prices do not crash without a glut of inventory. So, given the situation for owners and the slower pace of home building since 2008, it's far more likely we'll see transactions slow rather than prices fall off a cliff, which is why we're seeing homes sit a little longer now than we have in the past. And again, due to inflation, buyer demand is a little slower. They're still out there. And what's great is the real buyers have presented and are coming with real strong offers that are making it to the closing table. Just 2 weeks ago, we ran an open house on a property that in the past, no first time home buyer would have even had a chance at purchasing it because all the cash investors would have scooped it up and it would have been a done deal. Here's the good news: that particular house was priced right on the money, and we had an excellent marketing strategy. We had over 20 groups come through the mega open house over that weekend with one offer and two backups. And when the first offer fell through, we were able to immediately go into a backup offer, and that house will be closing in the next 2 weeks. So there is hope for sellers, and there's also hope for buyers. We have advanced notice of possible outcomes that are coming as opposed to 2008. So this is the most anticipated recession that's probably ever been. That means that there's professionals that have had time to analyze data, prepare strategies, so that when things do come to fruition, there's a strategic approach in place instead of a panic in place. And we all know what the panic felt like. Also, houses are still selling, and if rates continue to climb, it will create more urgency for buyers to make a decision now versus waiting for later. As the trends are showing, rates have continued to incrementally increase. Buyers are wanting to get into homes sooner to lock in their rate. Sellers, this is also an important time to cash in that equity as home appreciation could change in the near future. Here's another great thing: the skilled agents in Northeast Florida will survive and thrive throughout this. It's a process of elimination. The real pros are going to be here that truly understand what it takes to market and sell a home, to write that winning offer for a buyer, to really understand and gauge what the market trends are, and to successfully navigate their clients into selling or purchasing the home that makes sense for them right now. It's also entirely possible that a recession could bring lower rates. They historically do. And we've seen that when the rates were as high as 16, 20%, and they came all the way back down to 2%. Time is the measure. So if the rates do start to trend down, it will ignite the housing market and re engage the craziness that occurred back in 2020 and 2021, which is why it's also important, if you're looking to buy or sell, that you take advantage of the time now. So, where is this being felt? Well, it's a little different depending on where you live. Our economy is local, and certain areas will be hit harder than others. There's areas that will outperform, and there's price points that will always sell in any market. There is big money on the sidelines waiting for an opportunity to buy. Private equity firms have roughly $380 billion on the sidelines allocated to real estate investments. Real estate is the foundation investment in any portfolio. Talk to any executor or investor or major investor, major real estate purchase companies. They align their business financial plans around the foundation of real estate. And 2024 is an election year. This is a wild card. Logic would suggest politicians in charge would rather the market not crash before an election. And we may have a year or so before we're in serious troubled waters. This was a long shot, and we've covered a lot of information today. It's time to get rid of things that aren't adding value and start aligning ourselves with what the reality is in the market and working with the resources that we have available to us and ensuring our partnership is with a local, trusted, and experienced agent to help you navigate the market, whether you're choosing to sell or purchase. I'm very optimistic about the Jacksonville market. Based on the data and trends that we're looking at weekly, you should be too. Let's make this week the best week. Let's work with the resources we have. And instead of the doom and gloom or the punny date the rate, marry the house, why don't we just connect and have a real conversation about really what's going on in your world and how that would influence your decisions in real estate? I'm Gigi, your homegirl, with the Gigi Your Homegirl group, where we base our real estate business on relationships and providing you with resources to help you make the most informed decision of what's right for you either now or in the future. I mean, what could possibly be the downside of a real estate conversation?